Well, it's really a long history. I, my interest in Islamic economics began when I was student at the University of Damascus. I entered the School of Business, although I was, according to the schedule of grades and so on, I was qualified to enter into the medical school. But I selected the School of Business. Then I thought I wanted to be an accountant. But during my study, I noticed that there are things that are important that Islam teaches in the area of economics. And I started to be interested in Islamic economics. Didn't get much chance to do Islamic economics at that time, but my first experience was shortly after graduation from my bachelor's degree at the University of Damascus. There were several members of the parliament. At that time we had parliament in Syria. We had free election in the fall of 1961. And then the parliament lived for 6 months. And there was an Islamic front in the parliament. They commissioned a committee of 11 people. I was its secretary, to prepare a draft. This is not known really outside, but this is a part of our history. To prepare a draft to eliminate interest from the banks in Syria. At that time, all banks were nationalized because we were coming from the rule of Jamal Abdel Nasser with this separatist coup that brought Syria back as an independent country. And during the time of Abdel Nasser, banks were nationalized. So they were government banks. And it wasn't difficult to eliminate interest from them. I remember part of the study we made, we had a conclusion that if we eliminate interest on both sides, interest paid by banks and interest taken by the banks would not lose. At that time, the balance sheets and the statements of accounts of these banks in Syria indicated that they were actually making their profits only from commissions and other charges that are not interest. We prepared a draft, but then came the coup of March 1962 that dissolved the parliament and so on, and we had dictatorship. A little while after that, I decided that, well, I need to further my study in economics to serve the area of Islamic economics. So I was able to come to the United States in 1971, beginning of 71, to study economics. I got my PhD in economics. I wrote my first article on Islamic economics under the title Challenges Faced by Muslim Economists in 1972. It was presented at the first meeting where we established the Association of Social Scientists. It's called AMSS, Association of Muslim Social Scientists. I was a founding member in it, and the late Ismail Farouqi was his first president then. That was in 1972. We established it, and I presented that paper. The second paper I wrote was developed later into my first book on Islamic economics under the title The Islamic Economy. It was published both in English and in Arabic. In English in America, in Indiana, and in Arabic was published by Dar al-Qalam in Egypt and Kuwait. Since then, I've been writing on Islamic economics and then come to the area of Islamic banking shortly before I joined the IDB in 1985. I didn't write on Islamic banking before that, but generally on Islamic economics and the issue of interest. I've written several articles and books. By now I have more than 25 books in Arabic and in English, and I have some 85 plus articles, of them more than 55 published in recognized journals. I turned into, I have been always critical. That's my nature. So when I turned into in writing on Islamic banking, I was critical of the theory of Islamic banking, and I thought that the way it was going, even in my last paper, I referred to that, the paper that I'm going to present in Harvard next week, that the Islamic banking theory, because it preceded the practice of Islamic banking, it took the direction of what is called mudaraba, or two-tier mudaraba, that the Islamic bank must only give venture capital. Now, when Islamic banks were established, Islamic banks mostly gave short-term financing. The theory could not cope with that. And in my opinion, the theory of Islamic banking needed to be reformulated. I prepared a proposal, long proposal for a book actually, which I hope I'll be able to write in the coming short time, to revise or kind of survey the past and make some new contribution in the theory of Islamic economics that is based essentially on mudaraba with depositors, but not mudaraba with users of funds. It's interesting that users of funds don't like generally mudaraba. They need other kind of modes and financing contracts. So this is my story with it. Well, the Islamic financial system, Islamic banking and Islamic finance, has three important contributions to the mainstream banking, to the mainstream system, mainstream finance, that are recognized very little even by the writers on Islamic banking and Islamic finance. The first contribution is that it reformulates the relation with depositors. Relation with depositors used to be lending relation, that you deposit with the bank, it's a time deposit or a demand deposit. The time deposit is a loan to the bank and you get interest, which is liability on the bank. Now, the reformulation has a deep effect on the banking system itself, if it can be carried out by the whole banking system. The deep effect is that the depositors are partners now with you. They are no more lenders. They are no more creditors. Their profit and their capital is no more liability on the bank. It's like equity. Now, this is one. The second contribution is in restricting financing to actual commodities, assets. You cannot finance in the Islamic system, you cannot finance many of the services, like labor compensation. You cannot really finance labor compensation through Islamic economic system, because it is restricted to buying a commodity and selling it, and you cannot buy labor and sell it, so service. Most services cannot be financed. You cannot finance electricity. You cannot finance the current expenses. You can finance inventory. You can finance equipment. You can finance buildings and so on. So this kind of restriction has an important effect. More in what it excludes than in what it does. What it does, financing commodities, also commercial banks finance commodities. But by saying we only finance commodities, we are excluding, one, financing the rescheduling. There is no rescheduling in the Islamic financing, because the Quran says فَنَظِرَةٌ إِلَى مَيْسَرَةٍ, that if the debtor cannot pay, you don't reschedule his debt with an increment on the amount of the debt. You cannot make an increment. You reschedule it free. So there is no rescheduling. There is no discounting by the same token. And also there is no wholesale financing. So you cut the second layer of financing. Financing becomes in the Islamic system only one layer. It doesn't go to a second layer. This is very important because you don't pile layers above layers of financing, like what happens in the finance-based now capitalism or system, especially in America. So this is a second effect which is of great importance. The third effect is also a great contribution, and it is an invention actually of Islamic banking. You see, when writers started writing on Islamic banking, to my knowledge, the earliest writing on Islamic banking was of Anwar Qureshi in Pakistani from 1948. Then comes the Interest-Free Bank, this small booklet by Muhammad Uzair, also from Pakistan. Muhammad Uzair is an American graduate. He wrote his booklet in 1955. It was published in 1955 for the first time. That was the one we depended on when we made the proposal of eliminating interest from the banks in Syria in 1960, late 61, early 62. So the Islamic banks as a theory started from, eliminating interest. But when Islamic banks were established, they had to consult ulama, obviously. And then consulting ulama, the first point that was said, well, if you are Islamic, there are things you cannot do. So you have to restrict your investments to subset of what is available in the market. That subset has to fulfill certain moral or ethical conditions. Well, you cannot finance tobacco industry, although even without interest. You cannot finance anything that is harmful, even if it were without interest. You cannot finance casinos, even if it were without interest. So the area went that, well, there are things you have to add a moral criteria to your investment. That was an Islamic invention, or rather an invention of Islamic banks, not coming from the Muslim economists and bankers like me and people who wrote on Islamic banking, but it was coming actually from the ulama who were contacted by the Islamic banks to have their ideas. Okay, we want to make an Islamic bank. How should we do it? So they told, one of the things they were told, these Islamic bankers, newly rising Islamic bankers, well, you've got to add to your investment criteria a moral criteria. That was a great difference between the Islamic bank and the conventional banks that are just money maker, regardless or on what basis and what do they finance. They never mind what do they finance. So these three contributions are extremely important contributions that are very often not noticed, not written about. To my knowledge, there is not a single writer who wrote on this from among the Islamic economists. Recently, Dr. Najatullah Siddiqui is interested he didn't publish anything yet, but he has interest in moral economics, and probably he might write. In 1999, I have a paper published in the Thunderbird Journal of Management. The paper point out these three contributions of Islamic banking. And these can be applied by mainstream banking. Notice, they are not religious in that sense. What is beautiful about Islamic banking, in fact, this is the same thing, what is beautiful about the Islamic Sharia. Islamic Sharia is a civic Sharia. It's not a religious Sharia. It's derived from the religion, derived from the Quran and Sunnah, but it is a civil law. As I remember the French Orientalist died, Jacques Burke. He used to call the Islam or Islamic Sharia as this is a secularist religion. It's a religion, but yet it is secularist, because when you deal in Sharia, in law, you deal with it on civic basis, not on religious basis. There is no edge or advantage to those who are religious or to in the law. The law treats everybody the same, and the law is open to everybody. Probably some people remember that some of the so-called, though we don't like them, they had many problems, so-called Islamic investment companies in Egypt. Some of them were established and owned by Christians and run by Christians. So they were Islamic simply because they follow certain criteria. Once you follow these criteria, then you are Islamic. You don't have to be Muslim to follow them. So these contributions are civic contributions to the mainstream banking. This is important to emphasize. Well, that's interesting. That's very interesting. That's economics now, not banking. But that's interesting. My economic views are very liberal. I don't think that you can attribute to Islam as a religion or as an ideology any viewpoint that is regressive, that denies achievements of humanity at any time or at any age. So, in my opinion, the invention of paper money and later electronic money, both are two of the great inventions that human beings made in the human history. And going back to dig for gold and pay all that cost, social cost obviously, and then say, oh, we want a gold standard money or a gold money, instead of at the time that you can print paper as much as you can, free almost, it's nonsense. So I don't accept any view that says, oh, because at the time of the Prophet sallallahu alaihi wasallam, money used to be gold and silver, there is something Islamic about it. Well, I say it more than that. The Prophet ﷺ never minted money, never minted currency, gold or silver. He used to use the currency that was made in Persia or in the Roman Empire, and he used both of them. So does it mean that a Muslim country doesn't have to have its own money? No. In my opinion, it is wrong to think in those terms that are, to me, regressive, deny the human achievements. I'm very liberal from that point, completely. I take it for granted that paper currency, electronic currency are there, and they are there to stay, and there is nothing that can be said un-Islamic about them. Now, obviously, anything can be messed around. Now, if the government messes with the paper currency, it can also mess with demand deposits, it can mess with electronic currency, it can mess with anything. It can mess with the human minds also. We have to limit the government from messing not to deny the invention that saved humanity a lot of effort and a lot of cost. So paper currency is okay, no doubt about it. Yeah, that's fine. So what is wrong with that? Why should we have something that has a value in its own? Why? What is the virtue of that? There's no virtue in that. It has a value because it costs a lot. And this one doesn't have a value because it's just a piece of paper. And so you have to give it a value by saying, oh, this is $100 and this is $20. So what's wrong with that? So what? There's no outcome that comes of that argument. No outcome of weight that affects rejecting or accepting the paper currency. So what? We grew up from that stage of using a currency that has a value in itself to using a currency that is nominal, that we give it the value. That's fine. It's development toward the better. So we don't go back. We don't want to go back. I have a published paper on that. It was published in the early 90s. Time in itself is valuable in a sense that you cannot really, it's more than value. You cannot put value. Time is life. You can put a price tag on it. But when you come to money itself, how would it have a time value? Properties may have time values. Assets may. They change value with time. But why should money has a time value in itself? Think of it. Isn't that like what Al-Qurtubi, one of the commentators on the Quran, calls it illusion? He uses the term wahm, illusion, that this is an illusion. What is it? How would you put a value on the time that passes on a thing that is used only as a means of exchange or even a store of value? Well, how would you put value on its time? A $10 is in my pocket is a $10 in my pocket, and is a $10 in the bank, and is a $10 given to you as a debt. So it is $10. It won't become by all means $11. So how would it become 11? It's only by assumption that you make a gain, you benefit from that. Now that assumption, we don't deny that there is benefit from having what is called real balances in your pocket or in your bank account. We benefit from that. Precautionary demand for money, they call it. Well, there is benefit from that, no doubt about it. But that benefit is not time related, is assets related, it's real balances related. That's fine. Now, there is that benefit, and it makes a difference whether I have it in my pocket or I don't have it. When I borrow from you, I have it in my pocket. That difference is there, but that difference cannot have a price tag because of two things. One, you don't know whether it is negative or positive. Sometimes it may get a negative value. Two, there is no way to estimate that benefit. It's a moral benefit. It's not material benefit. So when you give me a loan, I have a moral obligation of being grateful to you, of thanking you, but I cannot compensate you in material terms because there's no way of estimating it. And that one, the benefit itself is not realized. It is expected. It may turn out to be negative. You give me a loan and I lose with the project. So I lost. How would anyone claim that I benefited from the loan you gave me? It came negative because I lost. I may do something either because of me or because of circumstances that ends up that money will go away, will vanish. So what is the benefit then? You can associate time value with assets, with real things, with goods, with commodities, with properties, but not with money itself.